What's going on, guys? I'm Nick Conti, and in this video, we're going to go over my two setups that I look for before placing a trade. So the first thing I do before I even consider taking a trade is I'll go to the larger time frames. I'll go say like the weekly or the daily. For the daily, I'll see if we made either a higher high or a lower low, or if we're staying within the previous day candles range. And then from there, once I've identified the trend, if it's trending or ranging, then I'll go to the hourly to identify key levels and get a closer look at where the trend is going, where it's heading. And then from there, during the market hours, I'll go to the medium time frames between like the 5 and the 30 minute, but I'm mainly on the 15 minute. From the 15 minute, I'll identify how price is moving, how it's reacting to those levels. And when we start heading close to a specific level, then I'll scope down to the 1 to 2 minute time frames to look for my actual setup and execute my trade from there. So say I'm looking for an entry around here as this 15-minute candle is getting ready to close and this one's about to open. And I'm long biased. So we'll go down to the 2-minute chart, and here's where I find my setup. The reversal bullish hammer candle. I'll circle it right here. This is the setup that I look for. The bullish hammer candle is the heart of the setup, the meat and the potatoes, but these candles to the left and the right are super important. So as you can see, we're making lower highs, lower lows, all bearish candles. Looked like we were going to come back up here. That didn't pan out. We didn't get that bullish move that we were looking for, and we sold off even harder. But then what happened? We got another bullish candle, a bullish hammer candle. And in case you don't know what a bullish hammer candle is, the bullish hammer candle signifies that sellers are running out of steam and the buyers are taking control. Because you see this wick down, the buyers pushed it up, and this candle was able to close green. But the hammer candle is not enough to say, oh, it's time for me to get into a trade, because if you did that here, you most likely would have gotten stopped out on the lower low from this candle, right? So if you look right here, bullish hammer candle, boom. Right when we make the higher high, that's where you want to get into the trade for longs. Now, just because this wicks down here and then it pushed up doesn't mean that it just went up. Like, it could have broken that high, flushed back down, and then came back up again. So what you want to do is, after break that high, you enter the trade. Your stop would be below the low of, I know those dots are a little annoying, but below the low of, look at the arrow. Below the low of this candle right there. So somewhere in this zone. For NQ, this would have been about a 20-point stop. You start with smaller size, and then you scale into the trade as we keep making those higher highs. So for me, I would have entered 1 mini here. Stop would have been below the low of this candle, and then scaled in 1 to 2 more contracts to ride it up to either these highs or wherever your heart desires. So this is the buy setup. The same exact setup works for if you're looking for a reversal to the downside. But the most important thing I want to clarify when it comes to these setups, whether the probability of these setups is even going to work, because this isn't going to work every time, right? The context of the overall market is going to be crucial before taking these types of trades. You want to have the context of the market in the back of your mind when doing your pre-market analysis, having your pre-market game plan, and getting ready to take your trades. So context of the market is going to be huge. You want to take into account where the trend has been, overall market sentiment, the news, potential news that's coming up or news that's already come out. You don't want to be thinking about these things all at once because then it's like, oh my gosh, what do I do? You want to have that preset before you even start looking for your setup. You have that in your mind as you're looking for your setup so that everything is in confluence with each other. You're not having any conflicting viewpoints, and you're able to make your trades and executions flawlessly. And even though you have all those things aligned, the trade you could still get stopped out in the trade. No matter how good your entry is, doesn't matter, but we're playing the probabilities. This is a probabilities game. And for me, full circle, just like the one right here, given the context of the overall market, on the uptrend, higher highs, higher lows, reversal hammer candle, buy setup, boom, 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 boom. The probabilities that this was going to go higher were higher. So that is why this was a good trade to go long. The second setup I look for is the 3 crown reversal. So I might have coined the name, but I didn't coin the setup. Basically, all it really is if a level gets 3 touch points and then flushes after 3 rejections. So right here, this one specifically is known as the Morning Star because it has this inverse hammer candle and then made the lower low and flush down. Even right here, 3 touch points and then flushed all the way back down. Now, you're probably saying, all right, where do I put my entry? I'll show you right now. But even if you don't scope down to the 2-minute chart, you could even just use the 15-minute chart. Like say we open and then we start pumping back up again, you could have an entry right at the 20 EMA. I'm not going to talk about the EMAs for this video. I'll save that for another video, giving a full breakdown of how I use the EMAs because this video is just going to get too long. But the EMAs, basically, they're just a nice extra confirmation. They give you an overall view of the trend and a confirmation of if it hits one of these EMAs and either keeps going lower or keeps going up, that's like another good sign of continuation or reversal pattern. So like you could have easily done this, like say you didn't have the EMAs. You obviously still could have taken this trade just because of how the candles formed, how price panned out. But the EMAs, they just give that nice extra confluence to give you more confidence in taking the trade. So we had the rejection of the 20 EMA, one confirmation. We couldn't really break through to go make a higher high. We've been on the downtrend. And the 20 EMA showcased a continuation of the downtrend. From what I've noticed from looking at the charts, from my experience, the 9 EMA is usually, when the 9 EMA is over the 20 EMA, it's bullish, it's got bullish momentum. But when the 20 EMA is over the 9 EMA, it's bearish. And in case you didn't know which one was which, the 20 EMA is the maroon one and the 9 EMA is the blue one that I just had custom myself. You could have it whatever color your heart's desire. Yeah, the 3 crown touch point, here it panned out, here it panned out. I mainly use it for flushes to the downside. You could also use it for the upside. It's basically just when you get 3 touch points, boom, there's another one right here. I don't know what time it was, 10:45 a.m. You had another one there. And obviously, like you don't know, on this third candle, you don't know if it's going to keep going up, right? Which is why we have stops in place. So say your entry, obviously hindsight, but say so this one you could have taken regardless of the EMAs. Even with the EMAs, like we're already pretty far from them, and price usually gravitates back towards the EMAs. Just market corrections, it's just how the market moves. So you could have taken this one as well, and your stop, say you entered around here, stop would just be above the high of this candle. Boom. Risk to reward. Look at that. That ended up panning out. Could have had it just to this spot right here. It would have been a long hold because this is the 15-minute chart, but the time frame doesn't matter. Look at that. Nice 4-to-1 right there. The reason I like this one is because you could have a tighter stop loss and you pretty much have the cards in your favor. You could put on more size with the tighter stop and let the trade play out from there. So those are my 2 main setups, guys. I hope you liked this video. If you have any more questions in the comments, feel free to leave them down below, and I'll be more than happy to answer. So like, subscribe. I've got plenty more videos like these coming out real soon, so stay tuned. Peace.